Hi guys, it's Katrina here. I thought I would make a video going over the SPXA200R chart that I have been posting about. And what it is it is the percent of the S&P 500 companies that are trading above their 200-day simple moving average. And I've been posting it for a while now because, as you know, the markets have been going down. And this chart kind of helps gauge like where a bottom could be. And right now I'm showing you the weekly chart for the SPXA200R. And I have it dated all the way back to the financial crisis. And pretty much how it works is, over here is your percentage. And I always talk about the green line, which is 0.2 or 20%. And then, there's, you got your 30, your 40, my yellow line is my 50%. And then you got 60, 70. My red line up here is 77%. And pretty much what that tells me is the green line means 20% of the S&P names are trading above their 200-day moving average. If you get here kind of in the middle, 50%, that means 50% of the S&P names are trading above their 200 MA. And then you get up here to the red, and I have 77% are trading above their 200 MA. So if you remember, from the COVID crash, we just had this, crazy, rally, bull market. And I mean, look where the bottom of the COVID crash is. It's below that, that 20% mark. It was a V-shaped recovery. You can see the V shape. And look, that rally, that huge bull rally market we had in 2020 all the way up in 2021. And look, it went all the way from, the low is like 0.02, which meant at the bottom of COVID crash, the very bottom low, only 2% of S&P names were trading above their 200-day moving average. Otherwise, 98% were trading below. Like, that's how low that got. And look, it rallied all the way up to 97% of S&P names were trading above their 200-day moving average. So in other words, when you're pretty much above this red line, the 77%, like, you want to, probably start taking, caution there. Definitely probably taking some profits there, caution there. And if you're below this green, you probably want to, start adding positions. And then it looks like in the yellow, you're pretty much in the middle. You're in the middle. You don't really know if the market's going up or down, but you're kind of in the middle. But I mean, if we go all the way back to the financial crisis, it was a W-shaped bottom or recovery. We went all the way down below the 20% mark, went back up, we're above it, and then we went right back below it again. We went as low as 0.01, meaning only 1% of the S&P 500 companies were above their 200-day moving average. So I mean, and if you would have bought down here, look at that rally, like all the way back up, above the red. So, I always post about, making generational wealth below this 20. And you can see on this chart, like if you would have bought here, you could have made money going all the way back up. if you would have bought when it went back down here or added to your positions, look at all the money you would have made. So, I mean, if we ever get close to under this 20%, this green line, like, you know, I'd really start looking at, you know, adding positions. And, you know, thankfully we got it recently. Like the past 2 weeks, we've gotten it finally. Because, you know, as you can see, like all these underneath the 20, they all eventually, you know, the markets eventually came back. Right here, barely tipped it. Looks like, you know, it was like a W, came back and tipped it again and went right back up. You know, right here, this is the December 2018 crash, you know, and below is that, you know, it's that, if everybody remembers that Christmas Eve was it Christmas Eve? Yeah, Christmas Eve of December 2018. That was the low, which hit 0.11. So we've actually, you know, recently went lower than the December 2018, you know, crash low. Because we hit, you know, like I think a couple weeks ago, the low, when S&P hit like 36, something like that, we hit 0.10, so like 1 point lower. But look at the December, you know, whenever it was below the green line in December 2018, look, it came back. Then the COVID crash hit, you know, and then it came back. So now we're already back down there. I mean, you know, we can always, you know, do the financial crisis, be down for a little bit, come up, go back down again, go back up. You know, I don't know. All I know is every time it's been below this green line, like, you will eventually make some money. So that's, you know, that's what I've been kind of, you know, trying to show everybody. So this is the weekly. So I've been posting recently the daily to kind of give you a better, you know, view of it. So I think I need to retype this real quick so you guys understand. And then I haven't really been shown stochastics or the MACD on this. I mean, they look like they could roll over, but, you know, I've really been showing this part. So we already hit a low. We already know the low, 0.10 on June 17th. And that's when S&P hit, I think, like 36, or whatever the low was. So I'm going to put that in. Now, and then remember, the 2018 low is 0.11. So we went lower than the 2018 low. Put that in there. Jesus. You know, we came down here, and man, I remember seeing this. I think I posted about it, and I didn't know. I mean, I had bought some in here, but I just didn't know. But now I know. Now I know, guys. But man, if you would have bought that down here, like when it hit December 2018 low, I was thinking more like COVID's way down here. I think COVID's at 2.02, so COVID's like not even on the chart. COVID's way down here. The COVID low is down here, guys. This is the COVID low right here. So I mean, like, I was like a little worried we were gonna go, you know, I didn't know, way down, you know, but we didn't. We bounced right around the December 2018 low. That's where we bounced. And look, we came all the way back up. Like, this is money being made. If you would have bought down here, or if you would have bought down here, you would have made money here. Look. And now we're coming back down, so that's the only thing is you don't know if you're going to come back down or not. And we did, and I'm kind of happy because we get another second chance at it. But I know, like, you know, I was saying, you know, I bought here yesterday, the dip, you know, I bought this morning because I was like, I've been wanting a 13, you know, the 0.11, but you don't know if it'll get there, guys. But I bought, you know, I know I posted it, I want 0.13, but it hit, you know, 0.14 this morning, and that means that 14% of the S&P 500 companies were above their 200. That's not a lot, guys. That's not a lot of companies. So you know we're like pretty low here. You know, you already know how low December went and bounced. You know, now you know the COVID low. Are we going to get that low? I don't know. I don't think we would. God, that would really tear up these markets. COVID crash low, but I mean, you really truly don't know. But we did hit December 2018 low already, guys. Like that, we already did. So, I mean, this could have been it. This might have been the low, guys. You don't know. You know, I don't know. But all I do know is buying down here, like, I feel pretty safe. And this is the thing, like, all the people, you know, like, who have been buying and buying all year long. Oh, this looks like a good price. Oh, this is cheap. Oh, and it keeps going lower and lower. Imagine, they bought up here. Like, they were buying all up in here, you know? If I go back a whole year. Like up here, look, stocks, you know, were well above, you know, this red line, which is pretty much overbought. But people like coming down here. Remember this one right here? People are buying this, people are buying this. Look, this is back in January, February, and they're still buying whenever stuff is. It looks like 0.38, which means 38% of stocks were above their 200. Well, guess what? Now, you know, 16%, only 16. You went from 38% to 16%. Like, people were all buying up in here, then they're buying right here, which is what, 26%. You're down, like, it went all the way down to 10%, guys. And now, today, it went to 14%. And that's where people got really screwed up, because they didn't ever use this chart to see, like, where, you know, where we were at. So, I thought I'd show this video to show you guys, you know, a little more about this chart. Hope it helps you out. The same rules apply for this chart as I use for my other charts. You know, there could be, like right here was a bullish cross, but it looks like they averted it, or they not averted it, they muted it. It's muted. I mean, you still have pressure coming down. So, you know, I don't know if we'll have a bullish cross or the bearish cross here, or if they avert it. But all I'm saying is you're buying right here the markets, and I'm saying like SPY or SPXL, or you know, the markets. You know, I'm not saying individual stocks. You know, you can buy some individual stocks, but this follows pretty much the S&P. And I'm saying, like, you know, like, this was the low here on June, you know, 17th. And look how low this went. Like this, you know, it hit December 2018 low on this chart. So, you know, if it goes back down there, I'm going to be buying all down here. My one big concern would be all the way down here. Oh my God, if we were to go all the way back on the COVID crash low, which I don't know if we would, oh my God, the markets would be really like bad. Because you saw where the markets hit, you know, S&P hit like 36, you know, 100 or whatever, which was equal to the December 2018 low. So if we were to go to the COVID crash low, God, I don't know, S&P would be like 3,400 or something. I'm just guessing, I don't know, but like that 3,450, maybe something like that. I don't know. So I hope this helps you out with this chart, because I know a lot of people are like, maybe not are taking me serious on it, but man, it's a really good gauge. I can't even say that word, gauge like where the market's at, like how much lower we could go. Like if you're buying below the screen, it might take a while. It might take a month or 2 or 3, I don't know, before it gets back up to this, 50% mark. But it will eventually get back up there, guys. I just, and maybe we do a W bottom here. Maybe it's setting up for a W bottom. I don't know. But anyways, yeah, I hope this helps you guys out. Feel free to ask me any questions. And I will post this on Twitter for you. All right, thank you. Bye.